program. Our market master of the day is Vineet Sambre, head of equities, DSP Mutual Fund. He's joining us now. Vineet, good to have you with us here. Good morning. Thank you very much. Is the primary market activity keeping you busy, Vineet?
Not really.
or the secondary market? No? You're not on the anchor prowl?
No, so actually, if you just look at the participation, we have been very selective as compared to the street, and it is to do really with the kind of market levels, valuation. So I think it's better to be on safe side than look at all of them.
No, absolutely. But it's crazy, right? I mean, the rush to get anchor allotment. I mean, the rule this week has been 40% listing gains. I mean, almost like a done thing.
No, but see, I think while it is all going good, but still, I mean, there is a lot of euphoria. I mean, people are there's a mad rush. So I would say it is also linked a lot to, how people are actually looking at, like you mentioned, anchor demand. So I think that is leading to a lot of this exuberance. But I think, at some point, a lot of the money will also move out from the secondary market to primary market, and then it will have its own bearing on the overall market. Then I think one has to be more, as I said, more rational and picky about where you are investing.
I mean, the primary market has been hot. And by the way, I want to say, and we'll put the story out later. We broke the story late evening yesterday that Flipkart, the big e-commerce player, is now also looking at an IPO. I mean, it's on the road to IPO. So if you thought 2024 was busy, I think 2025 is going to be equally, if not more busy. It's a lot of stuff lined up, which will hit the primary market going forward as well. Vineet, I must say, though, a lot of interesting business models, right? I mean, expensive, not, etc. is different, but look at Sagility, IKS. We don't have those kind of listed peers in that sense, right? Which are making it to the market. Today, we are speaking with a hotel company, but that's, of course, lots of listed players now. Somebody in the auto transmission space again, but a lot of newer business models also over the last 1 or 2 months, which have made it to the market.
No, I think this is a very valid point, Prashant, and this is what we also are very excited generally about, because India's growth is really looking very broad-based, and like you mentioned, new models have come. Few years back, we had the largest EMS company, or the outsourced manufacturing company, coming up with the IPO. We had also participated, and today it is a large cap company. It has crossed 1 lakh crore in terms of market capitalization. So I think there are very valuable pieces of business which are actually coming up in terms of new issuances. There are new areas to look at, and I think from that perspective, India as a country, it is also leading to a lot of de-risking, and also making the mid and small cap, let's say, more relevant from a participation perspective as compared to large cap. Because in general, I think people have been worried about the mid and small caps as well because of valuation, which is right. But in a way, there are so many segments where otherwise you can't participate via large cap. So I think you're right. These are interesting times. Over a course of a full cycle, maybe some of this business will truly create great value. Some may fizzle out, but which is where I think we need to sort of differentiate between the men and the boys, actually.
Glad you brought up that point, Vineet. Hi, good morning, Surabhi here. Great to have you on the show. Because I was looking just at that data in terms of performance. I mean, the stark outperformance of the mid-cap space, right? 33% in this year versus 10% on the Nifty. Even in December, the Nifty is down 1%. The mid-cap index is up 5%. And individual mid-caps have done much, much better. So now, to separate the men from the boys, so let's talk about some of the themes where you still see a reasonable valuation comfort, reasonable growth comfort. Find those pockets for us, at least sort of name them out. EMS, consumer technology, names like Swiggy, etc. Just name some areas where you still have comfort of taking a fresh investment call.
So before I talk about the sectors, let me say that at a very high level, the way we are thinking today is in terms of the absolute valuations. I don't see great margin of safety across all the sectors broadly. But where we are trying to seek margin of safety maybe is in the business cycles, or like you mentioned, visibility of growth. So I would say that one big theme which we believe should sort of come back would be the rural theme. Because after a long period of 1-2 years of underperformance, we are seeing that because of the welfare spends which are happening, or the rural income generally has been okay. I think that's one theme which one should sort of think about. Now there are various pockets within the rural and the semi-urban. Maybe one can look at largely. So that is one area we are looking at. So within that, maybe consumer, both discretionary, non-discretionary, is the way to play. There has been a lot of building material, the real estate which has got sold, and building material sector has still not shown the kind of upsides or the growth momentum, which we believe should happen at some point in time. And that is an area where I think we will see better visibility of growth, and which is where we are sort of looking at. The other, segments are the ones which we have been anyways positive over long period of time, healthcare, because that is a category which sustainably keeps growing as far as the domestic market is concerned at 11 to 12% and doesn't shock you a lot. And depending upon how their international businesses pan out, should do well. IT sector, I feel quite positive on the IT sector. There are a lot of headwinds which are coming up in terms of the AI shift and all of that, but I still believe that the sector has a potential to deliver good returns over a period of time. So I think these are maybe few segments which I can recall are sort of at least showing better visibility of growth, and it's okay to be part of that.
Select IT stocks will do well as well. Hi, Vineet. Good morning and good to see you. Vineet, since we're almost at the end of 2024, which has been a decent year, even with the recent, dizziness that we're seeing in the markets, the first 10 months were rather good. 2025, what is your expectations on the headline index? It's expected to be a difficult year, so that's why I ask you that. Should we be satisfied with some kind of a consolidation? Do you think that we could have a big down year? And also, this year was a year of mid and small caps. Next year, do you think it's going to be a year for large caps?
So I think, Nigel, very important question. And the way to think about the market is that it follows the earnings growth. And last 2-3 years has been very high in terms of the earnings growth. We have CAGR at over 20% plus. And now suddenly we are staring at, low single digit kind of earnings. Maybe September quarter was the first quarter of a very low earnings. And I think this low earnings momentum looks like sustaining for a quarter or two, because even the confidence is not yet back when we are talking to companies for the December quarter. So I would imagine that we are starting on a very cautious note, and maybe the market there's a room for consolidation, some correction over the course of the next at least first half. And post that, maybe depending upon how the growth metrics pick up, like I said, I'm positive on the rural side of the consumption. That should add, maybe government spends also start picking up. And a low base formation towards the March quarter should mean that starting, the second half of calendar year 25, we should start seeing some direction which the market would pick up in terms of growth. So to me, I think growth remains the most important aspect, fundamental aspect. It can take care of many problems as such. And till the time that returns, I won't see, market scaling new highs is my assessment.
Vineet, this maybe is the last interaction for 24, and we look ahead into 25 and beyond. Any one kind of micro theme where, fast-growing area where one can still find something reasonable out there? Of course, we can't talk stocks, but I'd love to. But what would that be? One space.
Sure. So Prashant, within the lending space, we are going through a bit of a stressful time. And in general, I think NBFCs have played a very good role as far as growth is concerned and good quality of assets is concerned. I'm assuming that the stress currently which we are seeing should spread and maybe over the course of next 1 or 2 quarters before we start seeing base formation there. I would be really interested to look at some of the excellent NBFCs within different pockets, maybe CVs or other personal finance and all of those, where I believe that if the stress leads to correction in that space, that's one space which can provide good returns over cycle. So I think we'll have to live through this difficult period for 1 or 2 quarters where you will get good opportunities. Is my assessment.
Got it. All right, Vineet. Thanks a lot for your words of advice with regard to the outlook as well as on current positioning of the markets. Wishing you all the best for the remainder of this year, Vineet, and looking forward to chat up with you in 2025.
Sure, Happy New Year, all of you. Thanks. Bye.
Happy New Year, Vineet.